Robinhood announced a 10% workforce reduction today. The stock went up 8.7%. We covered Hood about a month ago. Here's the updated FSR and why layoffs are pushing the stock higher instead of lower. Restructuring will cost about $28 million in quarter two charges, a real near-term hit, but the market read it as a signal of efficiency and discipline. Argus raised the price target from 90 to 110 today. The stock is now trading above the analyst average target of 101. Robinhood also reported record June trading volumes. The business itself is active even as headcount shrinks. 1 year of daily data, FSR Score 64%, Rolling FSR 90.5%. Price start of the year near $78, climbed steadily to a peak near $150, then sold off hard, dropping to around $67. The yearly average sits at $102. Price has been recovering since that sell-off and crossed back above the yearly average with 2 days move, currently at $105. Look at that rolling FSR chart around window 150 to 155. That's the worst reading of the year, dropping to 75%. That lines up with a steep sell-off from 150 to 67. The structure broke during that move. It has since recovered into the 90s, and today's layoff news, an 8.78% jump, is happening inside an already recovering trend. A month ago, when we last covered this story, was different. Today's update shows a stock that took a hard hit mid-year, found its footing, and is now responding positively to operational discipline. The market wants to see Robinhood run lean while volumes stay high. Earnings are July 29th. We'll check back before that report. Full tool at predictability-api.com. Link is in the description. Breakdowns happen all the time. Thank you for stopping by. Catch you in the next one.